we're gonna be recording this so that way we can play it back on the YouTube page later. So we'll start to record these so that way you can see the audio broadcasts on our YouTube channel. And the YouTube channel can be found at www.magnumopusfinancial.com. Then you'll see the MOF News Network should be in the lower lower left hand corner. Right when you log on, there should be 4 black buttons. One black button is just to alert you that this is the MOF News Network, and then the other 3 buttons are the actual content. So I'm going to turn it over to Rachel Kelly, who's the president of Magnum Opus Financial. She's the one who puts on the Lunch at the Market segments. I'm just in charge of getting the technical stuff up and running so that way she can do her job. So without further ado, here is the new Lunch at the Markets.
Good morning, everyone, to Lunch at the Market. I want to try to bring you this live from Ustream today for a change. If it works, we'll keep doing it. First things first, shameless self-promotion. There are new videos available at www.magnumopusfinancial.com/education. You can also go straight to the homepage at magnumopusfinancial.com and then click on education from there. Also, the articles we have written on the blog can be found by clicking on the blog button in the MOF News Network right on the homepage. Also, we appreciate everyone reading the articles, but please take place in the conversation by leaving a comment. That way we know if we're doing things that you like. So if the articles are so good that nothing can be added, well, just say that. Okay, on to important news on the day. First, let's talk about the articles we wrote in which we talked about hedging your long portfolio with UUP and VXX. The UUP is the PowerShares ETF that tracks the Dixie, which is the dollar index. As stocks trade down, it's usually preceded by the dollar ticking up. There are many people short the US dollar, so you can play this for a trade on a short squeeze, or you can own it for an investment as the short dollar. Long commodities trade has to be unwound at some point in the future. The reason the UUP is a hedge as opposed to an investment thesis is because your portfolio of long stock will work opposite of the UUP going up. So on declines, you will have protection as we see today. Second, owning the VXX is the iPath S&P 500 VIX short-term futures ETN. What does all this mean? Well, the VIX goes down, so does the VXX, but the VIX is another instrument that goes opposite of the indexes. So if we see the stock market sell off like we are today, then the VIX will trade back up. When the VXX is lower than $37 to $38, you probably want to get long it as a hedge in the market so that there's more downside risk than up. When we say more downside risk, we're more concerned about the market over the shorter term, as we think once earnings start to be reported in less than a month on January 11th. We do think you can continue to remain long into earnings season. We're trying to highlight ways to make money if the market trends flat or down into that date next year. Another strategy we've talked about, the buy right, is a great way to make money in the market that trends sideways or down. Take Boeing for instance. Boeing offers a 3% dividend and trades down around $55 right now. A buy right means that you'd buy it around $55 and then sell an out of the money call against the long stock position. You can sell the Boeing February $57.50 call for $1.71 or the Boeing February $60 call for $1.04. Let's break that down. What does that mean? If you sell the $57.50 strike in February, then you'll collect $171 for each contract you sell. Each contract represents 100 shares of stock. So if you own 100 shares of Boeing and then sell one call, if you own 200 shares of Boeing, you can sell 2 calls and collect $342. If you bought Boeing at $55 and it goes up to $57.50, and you'll make $2.50 a share, or $250 per 100 shares, and the $1.71 for selling the call, or $171. Total, if you had the stock called away from you in January on the third Friday, you'll make $421 in 30 days' time on 100 shares, or 7.6% rate of return on the trade. Honestly, that's nothing to shake a stick at. If you sell the May 2010 Boeing 60 strike for $2.47, you can also factor in the dividend to your return. On this trade, if you sold Boeing in May for $60, you would make $5 on the stock and another $2.47 and 42 cents on the dividend. That's a gain of $7.89 per share on 100 shares for 789 gain of 14.35% return over the next 6 months. Still not a bad trade. If the stock never hits the strike, then you can continue to collect the dividends and keep selling the upside calls against the stock position you own. This is called buy right strategy, where you buy the stock from some longer term thesis or because it provides enough volatility and then you write calls against it. To write a call means to sell one to someone. Options are technically insurance contracts, so you, the owner of the stock, become the writer of insurance, just like Progressive or Hartford or Allied writes your auto insurance. They only agree to do something if something happens to you, just like your stock. You only agree to sell the stock if it hits a certain price target. Otherwise, you get to keep the stock, just like the insurance company keeps your money if nothing happens. You get to keep the premium for selling the option. If you have questions about options, send us a message in the Contact Us section of the webpage at magnumopusfinancial.com, and we'll have someone give you a call. If you're uncomfortable doing these things for yourself, we have relationships with investment advisors that can help you with this kind of more complicated strategies. Okay, back to the rest of the story. We do still really like the master limited partnerships like Calumet Specialty Products, CLMT, which has a 10.2% dividend. Energy, NRGY, has 7.7% dividend, and Kinder Morgan Energy Partners has a 7% dividend. In a market that is uncertain, the percentage yield on these stocks will go up if share prices decline, so it's another way to protect yourself in the sideways or down market. With these names in 10 years or less, depending on which one you pick, you will double your money as long as the dividend stays the same, even if the stock does nothing. Not bad. Finally, we have to talk about Citigroup, symbol C. Wow, what an ugly, ugly situation over there at Citigroup. Please be aware that Dick Bove has been very clear that this secondary is a botch. In fact, on Fast Money, Bove pointed out that they asked Citigroup not to do this secondary. They counseled them very seriously to avoid doing this deal right now and instead to earn their way out of TARP over a period of years. While we agree that this deal is hideous, for right now, it still seems that the bank should be okay over the long term. Look, with Citigroup, you're buying an option that doesn't expire. If you bought 100 shares of it, you'd pay about $320 plus commissions to own the stock. Even 300 shares is still less than $1,000. So if you're willing to lose 100% of what you invest, Jim Cramer's been talking endlessly about waiting for the offering and then getting in on the secondary. If you were quick this morning, you could get in at $3.15 price and even lower if you had your order in there early. It's only up a few cents from that price. So if you're okay with $12 in 2012, then buy your lottery ticket or your option without an expiration and just wait and wait and wait a few more years to see your return. Even if the stock gets to $10 short of the $12 price target, you'll make 300% rate of return, which means that your average rate of return is still above 100% per year. So you be the judge. Just know the good and the bad of each side and then make a decision. If you're worried about Citigroup surviving, don't make that bet. Walk away and put money elsewhere. Our last really speculative trade, Jamba Inc., which owns and operates Jamba Juice stores, is up from $1 to $1.75 right now. That's a 75% return. Not bad. Don't forget to take some of that off and you can let the rest run. We hope you're having a wonderful holiday season as Hanukkah comes to a close. We still have Christmas to look forward to. Be safe. Don't drink and trade, and don't drink and drive either. Both are pretty dangerous. Enjoy your holiday season in a safe and enjoyable fashion, like by reading all of our blog posts we've done in December. Now that's a great idea. Don't forget to visit www.magnumopusfinancial.com often for new content. New videos on the YouTube channel are coming soon.